Welcome back to the channel. This week I received dividends from both Coca Cola and Pepsi. So in this video I'm going to look at both stocks and look at key financial metrics and decide which stock is best to invest in. So sit back, relax, get a drink and enjoy the video. I'm really grateful you've decided to stop by the channel. Don't forget to hit the subscribe button and turn on the notification bell so that you never miss a video. Okay, so before we get into the analysis, I just want to go through the stock positions I hold in both companies. So Pepsi, I invested $50 back on the 10th of August. And you can see I've got about 0.36 shares. And I received a dividend of 32 cents this week. And the stock is currently up around 2.5% at the time of recording. Coca Cola I've invested in much more recently. So I've just had a quick look. Again, I bought one share for $50.26 on the 11th of September, and I've just received a dividend of 35 cents. You can also see that the stock is currently down around 3.3% since I invested. Okay, so what you're looking at here is the KO stock portfolio company side by side. This is how I take a balanced scorecard approach to assessing two companies, and it works really well when those companies are in the same industry, like Coca Cola and Pepsi are. So this is like a large table with all of the criteria I'm looking at that I think is important in terms of financial metrics and the like, and then I'm simply just comparing the information in a tableau format and giving points to each of the companies based on how they're performing. So first up is Beat the Market Rank, which is posted on the Market Beat website. This is a series of criteria that Market Beat looks at to come up with an overall score out of 5. So you can see Coke scores 1.44 versus Pepsi's 2.12, meaning Pepsi clearly wins here. I like to invest in companies with a Beat the Market rank of over 2, and clearly Pepsi wins out. Okay, in terms of share price, we're not going to compare the actual share prices because they indicate simply the cost to invest in one share. What we're going to look at is the current market price versus the target consensus prices indicated by analysts. And we can clearly see here that Coca Cola has a price upside potential of 10%, 54.30 versus 49.37. That's a 10% potential upside, whereas Pepsi only has a 3.1% potential upside from 142.87 from 138.60. So we're going to award 1 point to Coca Cola here, and they win the share price section. Moving on to dividend, I've decided not to award points for Pepsi's larger annual dividend per share of 409 versus 164, but I will give a point to Coca Cola for the yield of 3.32 versus 2.95 for Pepsi. Having said that, Pepsi does have a better payout ratio because theirs is lower, just under 74%. The lower the payout ratio, the better, because it suggests less of income is being paid out and it's more sustainable. The 3-year growth for Pepsi is also much stronger, almost double, 28% versus 14%. So again, Pepsi wins out there. And look at that consecutive growth, 24 years for Pepsi, only 1 for Coke. Interestingly, Pepsi will become a dividend aristocrat if they continue that performance. So Pepsi wins out here. In terms of debt, Coca-Cola clearly wins out here. You can see the debt to equity ratio is lower, the current ratio is higher, suggesting a stronger balance sheet, as is the quick ratio, which also suggests a stronger balance sheet. So Coca-Cola clearly winning out here. When we look at price to earnings, Pepsi would be preferred. Although Coca-Cola has a lower trailing price to earnings ratio, Pepsi's forward-looking P ratio and P growth number are both lower, suggesting Pepsi has more value in the share price going forwards and is therefore preferred overall. Okay, so I think it's worth going through sales and book value in a bit more detail because I think this is really where Pepsi delivers the killer blow to Coca-Cola. First up, we can clearly see superior annual sales, with Pepsi $67.16 billion of sales versus Coca-Cola $37.27 billion, almost double. So clearly Pepsi scores the point there. And when we convert that to price to sales, so we look at the market capitalization versus sales, because Pepsi is able to generate more sales with a smaller market cap, that ratio, that number of 2.86 is clearly lower than Coca-Cola, which is preferable, because as investors, it simply means we're paying less per unit of sales. So we're paying less for every unit of sales of that company. So again, Pepsi goes 2-0 up. And look at this financial strength, cash flow per share, $7.47 for Pepsi versus $2.36 for Coke. Again, superior financial strength on show here, and Pepsi goes 3-0 up. Again, because Pepsi has a smaller market cap, it also means the price to cash flow ratio is lower for Pepsi, which again is preferred, 18.55 versus 20.75 for Coke. So again, Pepsi goes 4-0 up. We don't compare book value as such, so Coke has a book value per share of $4.92 versus $10.66 for Pepsi. It might be tempting to think, well, that makes Coke look cheap, but that's not the way to look at book value. You really want to look at book value as a multiple in relation to the market price. So remember, the market price for Coke is around $50 versus 139 for Pepsi. So when we look at that, this price to book ratio of 10 for Coke is actually suggesting Coke is more undervalued than Pepsi. So Coke pulls back a point there, but overall Pepsi secures this part of the scorecard 4-1 and really delivers the knockout blow here. And finally, when we look at profitability, again, like we saw with the cash flow per share, earnings per share, much superior for Pepsi, $5.53 versus $2.11 for Coke. So again, Pepsi secure another point. However, very interestingly, when we look at net income and net margins, Coca-Cola take both points here. So despite having annual sales far lower than Pepsi, Coke's actually able to generate more net income, so 8.92 billion versus 7.31, and you can see the net margins 26.77 for Coke versus only 10.13 for Pepsi. Now that 10 is just on the borderline I would look at. I always like to see companies generating double-digit margins, so Pepsi just gets in there, but far superior is Coke, and that's really impressive. Moving on to return on equity, Pepsi far superior, 54.77% versus 41%, so they take the point there. Stalemate on return on assets, 9%, so I've gone 0-0. There's a draw there, and overall for profitability the two companies are side by side with 2 points each. Just a couple of interesting things. We've already alluded to market cap, the fact that Coke has a bigger market cap, which is just the volume of shares multiplied by the current market value per share. So Coca-Cola is a bigger company. It's potentially due to the fact that it's the more well-known brand, potentially more investors, more retail investors getting in Coca-Cola, but clearly Pepsi has a bigger employee base, which is interesting as well, 267,000 employees versus Coke's 86,200. So some interesting dynamics between the two companies there. But overall, looking at the balanced scorecard, Pepsi comes out with 12 points versus 9 for Coke, and therefore I would say Pepsi is the stronger long-term investment. That said, as I've already said, I am invested in both companies, but what I'll probably look to do is invest more or a bigger proportion of the portfolio to Pepsi over the coming weeks and months. I'm obviously going to reinvest the dividends, but that's my take on the two companies. I hope you found that useful. As always, please remember to do your own financial research before making any investments. That's all for now. Please like and subscribe and stay tuned for more.